Chapter 6 will explain accounting for inventory. The objectives for this chapter include to define accounting principles related to inventory, define inventory costing methods, account for perpetual inventory using the three most common costing methods, compare the effects of the three most common inventory costing methods, apply the lower of cost or market rule to inventory, measure the effects of inventory errors, estimate ending inventory by the gross profit method, and account for periodic inventory using the three most common costing methods. The first learning objective is to define accounting principles related to inventory. Several accounting principles affect inventories. Among them are consistency, disclosure, materiality, and accounting conservatism. The consistency principle states that businesses should use the same accounting methods from period to period. Consistency helps investors compare a company's financial statements from one period to the next. Companies must report any changes in the accounting methods they use. Investors need this information to make wise decisions about the company. The disclosure principle holds that a company should report enough information for outsiders to make wise decisions about the company. In short, the company should report relevant, reliable, and comparable information about itself. This means disclosing the method being used to account for inventories. The materiality concept states that a company must perform strictly proper accounting only for significant items. Information is significant when it could cause someone to change a decision. The materiality concept frees accountants from having to report every last item in strict accordance with GAAP, or generally accepted accounting principles. Conservatism in accounting means exercising caution in reporting items to financial statements. Conservatism says, 1. Anticipate no gains, but provide for all probable losses. And 2. If in doubt, record an asset at the lowest reasonable amount and a liability at the highest reasonable amount. And 3. When there's a question, record an expense rather than an asset. The goal of conservatism is to report realistic figures. The accounting principles are the foundations that guide how we record transactions. This exercise reviews the accounting principles that affect inventories. Davidson Hardware used the FIFO inventory method in 2012. Davidson plans to continue using the FIFO method in future years. Which inventory principle is most relevant to Davidson's decision? Consistency, using the same accounting methods from period to period.